George.
Hello. We are officially live. Welcome, everybody. Thank you for coming on. My name is Michael. I'm the CEO of Entre. This is Jimmy. He's a co-founder and he's the head of events. We're really excited to have our women's panel, which was supposed to be at Microsoft, but hopefully everyone is safe and healthy out there. So we still wanted to do the event, and now we put it together virtually. We have a packed and amazing group of women founders and investors for you. And we're going to get started here in the next few minutes. We'll still let people come in now. If you see the chat in the right-hand side, please introduce yourselves. You can see we just added the speakers and their information. Let everyone know where you're from. Share who you are, what you're doing, and make sure that you can network and meet some people while we're here. You can also see at the bottom here, there's a question. It says ask a question. So you can ask a question during the event, and at the end, we're going to go through a whole Q&A session. So you can ask the speakers a question and get to know them and everything as well. If there's any questions or anything that's going on, if we lose audio or visual at any time, let us know in the chat as well so that we can adjust and switch things up. But we'll give it another 5 minutes or so. Just let people come on, and then we'll kick things off. Jimmy, is there anything you wanted to say, or feel free to introduce yourself as well?
Hi, everybody. My name is Jim Dillon-Bacchus. Thanks for everybody for joining. It's a special event tonight. We're celebrating women's entrepreneurs. It's a great panel. Look forward to everyone asking questions and engaging. And, this is a great platform. So looking forward to some great content tonight and great talks. So thanks for joining us.
Yeah, we're pretty excited. It was tough because, we wanted to do this event in person. It was one of our favorite events that we did last year. But, given the circumstances, we still wanted to do it. And, we have a lot of great speakers for everybody. So hopefully we can still have a great experience for everybody. And we're looking forward to the event. So if you're just coming in, again, drop your name, introduce yourself in the chat on the right-hand side. You can ask questions at the bottom. We're going to play a quick video for you guys on Entre real quick. If you don't know who we are and what we're doing or haven't been to any of our events before, we're a social network for entrepreneurs in the future of work. We're building out this platform to help entrepreneurs start their businesses easier and faster and connect with like-minded people, ask questions, share their ideas, share what they're building, and also find developers, freelancers, investors, mentors easier and faster and through a platform that's dedicated and designed for them. So we think that the future of work in the economy is entrepreneurship and startups and freelancing, and we want to be the platform to connect all these people. So right now we do events across 12 different cities. Obviously, right now we're transitioning to the virtual events, which is actually nice for people from other cities to actually, come on and join in on this event, since it was originally just going to be in New York. So we're transitioning. We'll probably do these virtual events for the next month or so, depending on if things calm down with the coronavirus and everything. So I hope everyone's staying safe out there. And then we're going to pick up the in-person events, when things calm down. But I think we're going to still do the virtual events as we roll out and launch our app as well, so that people can really just connect virtually and get that great experience of being, able to message and communicate with other entrepreneurs basically from their phone. The events are great to be in the same room, but some people in other cities can't access these entrepreneurs and these speakers. So we want to do events like this, and we want to really bring everyone together. It looks like we have over 50 people in, so this is going well. It looks like people are still coming in, but we're going to kick things off here in probably another minute or so. Again, if you have questions, if there's anything in particular you want us to talk about or discuss during the event, drop it in the chat. Let us know, what you're interested in learning about, and we can, go from there. But without further ado, I think right now we're going to play the video for Entre and kick things off. And then we'll go into our partners who helped made this event possible, Roger and Shermeen, and we can get things going from there. Give me 1 second.
Everybody.
Okay, here we go. I'm going to, Jimmy, I'm going to kick you off here. Thanks for coming on and introducing yourself. All right, now let me share my screen. Okay, and I'm going to go away here for a second. And here's a little introduction video about Entre. Okay. I think I'm going to come back on here. Can everyone see me and hear me again? Okay, great. So another thing, there's a button right down here. It's going to be the call to action button. So during this event, we're going to be changing this as the new speakers and everything come on. So right now, if you guys want to jump into and start betaing and testing out our app, we're giving everyone in our network early access to it. So if you click this button right here, you can sign up to register to beta the app, which is going to be going live in the next couple of weeks. So again, thank you guys so much for coming on. I'm going to introduce our first sponsor and partner, Roger. He's the founder of Realm Startup Advisory. He's a fantastic partner. I mean, he's a personal mentor and advisor for us. Fantastic guy, and I'm going to let him share more about his company and what he's doing and how he helps entrepreneurs. So he should be coming on the screen here in a second, and I'll let him share more about his company and everything that he's doing. Hey, Roger.
Hey, Michael. How's it going? Thanks. Well. Hi, everyone. I just wanted to say a few words right before the speakers and everyone comes on. I have known Michael and Entre and for a while now. I've spoken at a previous event, and when this came up, this opportunity to sponsor the Women Entrepreneurship Night, I jumped at the opportunity because I'm a big believer in it. Realm Startup Advisory, my firm. If you can see at the bottom there, you could click on it. It'll take you to my website. What I do for clients is basically outsource CFO, any finance that you need. I know a lot of startups don't have that line item in their budget to have that CFO function or finance function. That's what I help with on an outsource basis. Times like these, it's critical to think about your finances, and it's really smart to do it on an outsource basis. I do stuff on a project basis or a more ongoing basis for longer projects. And what I focus on is underrepresented founders. So female minority, LGBTQ. I'm Hispanic, so this really resonates with me. So when this opportunity to sponsor this event came up, I wanted to do this wholeheartedly. Even when it went online, I was totally fine with that. I love meeting people in person, but I still believe in it enough, and we have some great sponsors. I actually work a lot with Shermeen and recommend her and refer her all the time. She's great. A lot of my clients have used her, and everyone raves about her. So just a couple of things that I've been talking with clients about. I'll end the commercial for Realm there and just kind of tell you like what you should be thinking about in this environment. And that's, guarding every dollar as if it's your last. Like right now, you should be cutting all non-essential expenses, any outlays, defer the ones that you can't until you have more clarity. I think that's, what matters. No expense is too insignificant to do this. You should be focusing on your revenue generating opportunities, like from now until like the next 3 months from now. I'd usually say about 6 months, but some companies may not be around in 6 months. So those are the types of things you should be doing right now. I can't stress enough, you want to be communicating with employees, investors, your customers, suppliers, creditors, whoever it is. What you do during these tough times, that's what you're going to be remembered for going forward. So I can't recommend that enough. Talking about with clients, expense reduction, what does that look like? Is it letting people go? Is it temporary furloughs? Is it cutting salaries across the board so that you don't have to cut people permanently? There's a lot of great resources out there. If you contact me through my website, I will send you some great links that have things like, here in New York State, New York City, there are programs that, we'll see how they pan out, right? It's so early, but that could give you assistance, financial assistance. Maybe it's 0 interest loans or grants to keep and retain employees. Hopefully it works out, and hopefully there's stuff that's nationwide, but we'll see where that goes. That's pretty much it. I mean, I'm talking with clients about a lot more things, but feel free to reach out to me. I'd love to help. Obviously, helping underrepresented founders is, I would say, kind of like my reason for being in terms of being in business. So I don't hesitate. Please reach out, and I'm looking forward to this great event. And thanks everyone for having me.
I appreciate that, Roger. Yeah, there was someone who asked, what's the best way to contact you real quick? Is it just through your website, on LinkedIn? What's the best way?
So my website has everything. The way I think about it, right, is the way I communicate with people. Everyone's on different platforms. It could be Twitter, it could be LinkedIn, email, whatever is easiest for you. So I have everything there. So it won't have my email. I'll drop that in as well. But if you go to my website, you'll see Twitter, you'll see LinkedIn, you'll see Instagram. I'm not great at Instagram, so I wouldn't try that, but I'll drop my email in right now. And yeah, whatever is easiest for you, use that form of communication. But yeah, I'd say email is probably the best, but I have all the information on my website. Fantastic.
Thank you so much. Yeah, definitely. Everyone use Roger as a resource. I mean, he's a fantastic guy, extremely knowledgeable. He's worked with a lot of startups. He's an advisor on a lot of startups currently, also an angel investor. So he knows a lot. Use him as your resource, contact him. And he can also help introduce you to other people that might be able to help you along your journey. So thank you, Roger. We really appreciate it. And definitely reach out to him, everybody.
All right.
Thanks, care. Roger.
Bye.
All right. So next up, we have Shermeen. Let me get her on here. Stick with me for 1 second. She is the founder of Level Up Legal. She should be coming on screen here. Let's see. There we go.
Hey. Hi. This is my first time using this, so it's definitely interesting. But thanks so much, Michael, for having me as a sponsor. I'm glad to see everybody that I know on here and everybody that I haven't met before. As Roger mentioned, my name is Shermeen Laka, and I am the managing attorney and CEO of Level Up Legal. I represent startups, digital companies, entrepreneurs, and I work with a lot of female founders as well. So when Roger told me about this event, I was super excited to be a part of it. This is right up my alley with working with different female founders. My work, I provide anything from business formation to helping with seed rounds. I work a lot with Roger, where he provides his outsourced CFO skills, and I provide the legal. So it's a really great time right now, especially while people are at home, really figuring out what their next steps are, to be thinking about how to grow or protect yourself from a legal side perspective. What I'm doing right now to help out with the whole situation with the COVID-19 and people being at home is I am right now providing free consultations and also doing limited free contract review for people who are just struggling a little bit right now with fulfilling certain obligations, reviewing their doctrines of force majeure, doctrine of impracticability, the frustration of purpose within a contract. So right now it is a really important time to take a look at some of your contracts and balance between keeping your business relationships, maintaining your credibility, but also making sure that you stay afloat during this time. So you can reach out to me anytime via email. I try to be more of a legal advisor to my clients. So I have a very open line of communication. What sets me apart from a lot of other attorneys is that I do work virtually. So being at home right now isn't the worst thing for me. It's honestly, now everyone's just at home with me. So it's great. And also I do provide flat fees. That way I'm very transparent in the services I provide, and you don't have to worry that you're going to get some, large bill at the end of speaking to me. That way you can really account for your pricing and really put that in your line item for your budget. You can reach out to me. I'll drop my email in there. But great. Nice to meet everybody.
Thanks, Shermanie. Yeah, no, it was fantastic. I couldn't agree more. I think one of the reasons that, we wanted you to be part of this event too is because we really value not only, people who help underrepresented founders and whatnot, but also legal itself is an industry where for us, we want to, align our community with lawyers and attorneys who understand, startups and the early stage entrepreneurs and founders. And we don't really want the big firms, getting involved with our network, just because you're going to be able to provide so much more value to startup founders than some of these companies as the, and they serve their purpose, but especially for people who are starting out. And another thing too, there's a lot of tools for online resources and setting up your company online and whatnot. One of the things that we really recommend most people do is find a lawyer that they can know and trust. Right? Because if you do something online,
I can't tell you how many times I've had to review those documents that people use on those online.
Exactly. It's huge. And, you can do it online, but if your business is successful, which hopefully it is, you're going to have more legal questions. It's not going to be something where it's just going to be, a one-time thing. You want a lawyer like yourself who you can email, call at any time. They know you, they know who you are, and they know your business, so they can help you easily.
And I think that with larger law firms, they definitely, serve their purpose and they have a great amount of resources. But for a lot of these startups, the fees are extremely high. And so it's, great to start with someone like me who they can work with more as an in-house attorney. I think especially for startups, Roger and I have discussed this as well, is that, you're emailing hundreds of potential VCs. And then when you get a response, it's important to have your term sheet or, all the details that you need, your cap table ready so that you can keep the momentum going. I have a lot of clients that reach out to me on more of a reactive basis, saying, okay, well, I got a response, and now what do I do? So really being prepared to keep that momentum going is really important as well.
Totally. Especially now with everything going on, I think, like Roger mentioned as well, If you guys have questions about finance, like really reach out to Roger. Like these are weird times. He's dealt with it before. He'll be able to guide you really well. Same thing with legality and whatnot too. Definitely take advantage of connecting, with our partners and everything. But thank you so much for being a part of it. Drop your email in. Everyone, please reach out. She's amazing and we'll be able to help you so much.
Thanks, guys.
Thank you so much. All right. So we're going to bring up Vicky, who is moderating tonight's event. And we're going to have her introduce herself. She's an incredible woman. She's been on both sides of the table, which is why, we really wanted her to moderate the event tonight. She's been a founder. She's also an investor. She's really involved with women startups and founders and advises companies as well. And there she is. Hey, Vicky.
Hi.
How are you? Let's feel free to share your story and give people a little bit of background on yourself, and then we can bring on the other speakers here.
Great. Thank you for having me. So everyone, I'm Vicky Lay, and I am the head of impact investing at Artesian Venture Partners. So we are a global VC firm. We have about 400 portfolio companies and 800 million under management. So I'm on the investor side, but my background is actually as a founder. So I did my own edtech business before. And the reason why I'm so interested in this conversation is because I've actually founded a nonprofit called Cheese Syndicate. And what we plan to do, or what we want to achieve, is to help the economic emancipation of women and girls.
Sorry, I accidentally kicked your video off instead of mine. Go ahead.
That's okay. All good. Okay. Lucky, because I said my intro wrong, so there you go. But just to quickly, an overview of what I'm working on now is that I'm not sure if you guys know this, but the World Economic Forum actually highlighted that it's going to take 257 years for women to have the same economic opportunity as men. And I've got two nieces, aged 1 and 5, growing up in this world. I was a founder before. I have, I'm a minority in all my investor, founder, board member circles, and frankly, I'm not okay with these numbers of such a long time period of 257 years. And so we started Cheese Syndicate to try to shorten that gap, try to even the playing field, and we do that through events and networking. We do it through coaching and mentoring. And we actually are working with impact partners like the UN in the developing world as well.
Amazing. Fantastic. Is there anything else that you want to share before we bring on our first speaker here?
No, I'll keep it short and sweet.
Okay, beautiful. All right, I'm going to bring on first Erica, and she can share her background. We'll go through all the speakers, and then we'll start with the founders and get into some questions for the entrepreneurs. Give me 1 second. Erica should be coming on here in a minute or so. Here we go. Okay. There we go. Hey, Erica.
Hey, how are you?
We're doing great. Yeah, feel free to share your story, who you are, tell us all about 1000 Angels and your background and everything.
Yeah, sure. Hi, everyone. My name's Erica Duignan Minnihan. I am CEO and founder of 1000 Angels and Reactant Ventures. 1000 Angels is a digital platform for accredited investors who are interested in making investments in high growth startups. So we help our clients build a portfolio of direct investments in companies that are raising seed through Series B. So I actually started that company a little bit over 4.5 years ago, and we have several hundred investors on the platform. I'm also a co-founder and GP at Reinvent Ventures, which is a seed stage venture fund that invests in consumer technology.
Fantastic. Okay. Anything else you want to go over? You good? That was a fantastic introduction. Okay. If you guys want to check out, we're dropping the links to 1000 Angels, LinkedIn. If you click the button below, you can check out her site and everything as well. And now we're going to bring up, let's see. I'm going to bring on Sarah here, or actually I'm going to bring on Kim next. Let's see if we can get Kim. Alrighty. She should be joining here. Bear with me too, since this is the first time we have a lot of speakers coming on. Kim should have just gotten the invite. There we go. Okay.
Hi.
Hey, Kim.
Hey.
All right. Why don't you tell us a little bit about yourself and your story and, your company?
Sure. So I'm what I refer to as an accidental entrepreneur. I did not dream of becoming an entrepreneur, but 9 years later, here I am as a continued entrepreneur. And I started my company in January 2011, helping to engage fans with their favorite music artists and entertainment properties. So my company, the Superfan Company, continues to do that today, helping big music artists like Paul McCartney, platforms and sports teams like the New York Mets, big gatherings of super fans like Comic-Con, and we just finished a 9-city Oprah tour on March 8th, luckily before this virus really hit.
Amazing. Yeah, that was great timing. And you've been on Shark Tank too, haven't you?
Yes, I was on Shark Tank in 2015. So 5 years ago, crazy.
Yeah.
My hair was a lot darker.
That's awesome. Okay, thank you so much. I'm going to bring on Sarah now. Let's see if she's going to come in. And then there we go.
Hi, everybody.
Hey, Sarah.
Hi. Thanks for giving me a reason to wear lipstick today. I really appreciate that.
Sure, of course.
So I'm Sarah Carson. I'm the founder and CEO of Leota. We're a women's apparel brand that specializes in wash and wear fashion that you can do anything in. And I'm actually a former investment banker, and I was spending 100-hour weeks on Wall Street. And back then, in order to be taken seriously, I had to wear kind of women's versions of men's suits. And while I would be walking down the street, I noticed that athleisure was becoming more popular. It's women wearing exercise clothes like all the time. And I thought, as I'm in this power suit, super uncomfortable, dry cleaning everything, I thought there's got to be a better way. So I decided to quit my job and launch a brand based on making wash and wear fashion that's comfortable, wrinkle-free. You don't have to iron it. And it's perfect for travel. And I named my brand Leota after my great-grandmother. The idea worked. I bootstrapped the company. We ended up being on the fastest growing private companies in America for 2 years in a row and in the top 50 run by women. We sell to all the major retailers in the US, Nordstrom, Bloomingdale's, Neiman Marcus. We also sell to all of the kind of new ways that people are shopping now. So we sell to Stitch Fix doing wardrobe subscription. We sell to Rent the Runway doing wardrobe rental. And we've been size inclusive from day one, which is very important to me because I think fashion should be for everybody. And I'm more happy than ever, I must say, to be an omnichannel brand, especially this week when digital commerce has just basically stopped. We're still able to continue shipping. And that's me. I look forward to all your questions. I'm very transparent, so let's learn together.
Amazing. Yeah, it's a weird time for retail and everything. I'm bringing everybody back on here, and in a moment we'll have Vicky start things off, and then we'll come back on and bring on the investors. And without further ado, I'm going to let Vicky take over from here, and we can get the panel started. Thank you guys so much.
Great. Thank you so much, everybody, for your patience with our technology. And before we begin, I just want to say thank you so much for showing up. Considering everything that's going on in the world, we really appreciate you prioritizing this conversation, because at the end of the day, we've got to have women supporting women, men supporting women. And I'm so happy to be here and to have these amazing entrepreneurs to get inside and pick their brains about how they build their businesses. So I'd like to start with Kim. Can you please tell me a little bit about some of your learning journey, right? Because you've mentioned these big names that you've worked with, but that didn't come overnight. Tell me a little bit about what you've learned as a founder, and what are some of the challenges that you've come through that you're most proud of?
Yeah, I think, those big names definitely didn't start on day one. I think one big lesson that I've learned is that your reputation is everything in my industry, especially, which is entertainment. It's very much like you see in the movies. It's very old school. It's very boys club. It's very, my dad worked with your dad, and now we're the next gen of people working together. And so to sort of break into that, you need to nuzzle up to the right people and understand who does what and sort of where the political lines are. And then I think you really have to watch your reputation in all ways possible. I think a lot of times with entrepreneurs, the sort of mind frame is, throw gasoline on the fire, make as much money as possible, revenue, grow. And what I really realized is that it's actually not about revenue and growth, at least again in an entertainment industry. It's about fostering relationships. I would rather work on a relationship for 2 years that made me no money, and then at the end of that 2-year relationship, get a deal with Oprah, than to work on something in the beginning, have it explode and burn it. Because I think it's a long game, it's a marathon, and your reputation is everything. And we found that our biggest referrals and our biggest way of getting new clients is actually word of mouth. About 75% of our clients are repeat clients. And when you do a good job and do what's right for the consumer and for your client, and not necessarily what's right for you, my CFO would kill me. We've done business deals that don't make sense. We've lost money on deals, but you won't find anybody who most likely won't recommend us to somebody else because they know at the end of the day that we have their best interests in mind. And I think that in the long run is worth its weight in gold. So I think the way that we've been able to leverage and get more and more of these really high profile, high name artists and industries and brands is through word of mouth and really starting small and over the last 9 years working our way up.
And just a follow-up question to this notion of reputation, how do you build that when you're starting out? When you don't have the big names behind you, you're just trying to get your first customer or your first Beedo trial. How do you build a reputation that way?
I think building a reputation also starts with getting amazing mentors. If you're just thinking about starting a business or you're within 6 months or a year of starting your business, I know it was one of the biggest mistakes I had, which is not asking for help and not getting a mentor sooner. And people get really scared of the word mentor. Is it like a first date? Like, do I have to take them to coffee? Like, will you be my mentor? Check yes or no. Like, it doesn't have to be uncomfortable. It can be as simple as 2 or 3 times a year grabbing coffee with someone. It can be as simple as once a month getting on a 30-minute call and bouncing ideas. And it doesn't have to be the mentor is the 65-year-old white dude, although those mentors are great too. I have mentors that are 35-year-old other female founders who are just ahead of me. And, I think the word mentor kind of conjures this image and this formality that it really doesn't have to be. And so I think when you think about reputation, you think about those first customers, and you think about first starting your business, don't reinvent the wheel. Find other people that can mentor you or can help you, or you can, I always say, copy their homework, like copy somebody else's homework. There's lots of people, not only in this chat right now that I can see, but there's lots of people that can help you. And so I think, again, just being that resource and reaching out and creating community is really helpful when you're first starting.
Great. Yeah, no, I really agree with that idea of reputation and, starting out and looking for mentors to be able to build that track record. Sarah, look, I want to turn to you now, and you've got an amazing journey and story as well. You've been doing this for 9 years, and And we sort of, on our initial call together, we spoke about splitting up into first 3 years, second 3 years, third 3 years. What did you learn, and could you theme each part of that journey for yourself?
Mm-hmm. Well, I started my business with a bag of handmade samples on my arm. I got off at the Times Square subway station in the Garment District in Manhattan, and all I had was a Post-it note with the name of a pattern maker on it. And so I pretty much had to figure out everything really from scratch. And that's one thing that I found in starting my business is there's no manual for it. You can't, someone can't just tell you how to do it. Like, I really just had to figure it out myself. And I had to figure out supply chain. How do I get the product made? I mean, negotiating a deal for a Fortune 50 company was a lot different than negotiating an order for 50 pink wrap dresses on 39th Street. It's just a totally different skill set. And so I pretty much started my business, I just did everything myself. And this is the phase of the business that I call the scrappiness Olympics, where you've got to do as much as possible with as little as possible. And I was doing this strange thing called trying to be profitable. I know that hasn't been very popular in business the last few years. As
it should be more popular.
It should. I might be making a comeback with that point of view. We'll see. So the first part of my business journey was really all about scrappiness. And at that point, one of my do-overs, I would say, would be to probably bring in help a little bit sooner. I think I waited too long. And because I bootstrapped my company, I had to be outrageously risk averse. And one thing I did right, though, is that I was very focused about what I was doing. I wasn't trying to be everything to everybody. As entrepreneurs, I think we tend to be idea people, and we've got all these great concepts of like, oh, we could do this, we could do this. And once I started having success, I realized that, well, I really could do anything, but should I? And so saying no to things like, no, we're not going to do a kids line right now. No, we're not going to do a high price line and a low price line. Like these things that could be opportunities that just end up being distractions for me and the rest of my team. So that was an important lesson that I learned. And early on, I hired for my strengths, or I hired for my weaknesses rather. So there are definitely things that I'm great at and definitely things that I'm not great at. So my first hire was somebody who was kind of making up for things that I lacked that the company needed. So my first hire was a classically trained designer who could really like design in this way that I couldn't because I never went to fashion school. So we would be sitting down and going over everything that needs to happen. Like, okay, you do this and I'll do this, and everything had to get done, right? But it was just the two of us. Later on, my hiring became more about hiring away my strengths. There came a point where there are things that I was really good at, like sales and operations and graded operations. I hired those things away because having me hold on to those things actually would have held the company back.
Yes, I love that. And that's definitely something I see on the investor side is there's this kind of tipping point where you become a big business or you scale up, and that's when you realize that you can't always do what you want to do. You've got to do what you have to do and what only you can, right? So Kim, is that the same for you? How do you hire in your business? I know you also have an all-female team, so amazing. But tell me, how do you decide what functions you're going to hire? What's the and how do you develop and grow that team to, I guess, so that you can trust them and you can then focus, I guess, more on the business rather than in it?
Yeah, I think it's a tricky thing, right? Like over 9 years, at our highest, we were up to 16 employees. Now we have 4. I've gone through different methods of thinking about how to do this. I'm also a first-time entrepreneur, so full of mistakes over here. But at first it was, well, let me hire as many people as possible. Let me hire a social media manager. Let me hire an assistant. Let me hire. And what I personally realized along my entrepreneurial journey is I think there is something to the gig economy. There's a reason why Uber and Airbnb and Fiverr and Upwork and a ton of these companies exist. It's because there are experts in their specific niches that do things really well. So I have now sort of evolved over the past 3 or 4 years and taken on of a more Marvel Avengers model. I know that my team is not going to be the best to do social media. I know that my team's not going to be the best to build you a website, but I have lots of friends, again, in my entrepreneurial community that it's like, great, let me introduce you to James, or let me introduce you to Rachel, or let me introduce you to, and we can all work on it together, and that'll be amazing. But Rachel is really A+ at this. And if I try to do this with my team, it's going to be like a B-. It's passable. It's just not A. It's like B-. And so I'd rather partner with somebody who's going to do something A+ so that I can do my best things at A+. And then we're all on our highest function. And so that's just, again, the approach that I've taken. But I think for every business, it's completely unique. We're run like an agency. So for us, it's really about finding the people that are specialties in that niche and sort of plugging them into our larger machine.
Great. And I'm just going to ask I do want to bring the investors on as well, but I'd love to sort of speak very candidly about women entrepreneurs, being a woman entrepreneur. Do you have any advice which you'd like to impart on the audience today, or any, and not the ones we hear at all the networking events? Like, I want to get really deep, the stuff that you're like, this was something I really struggled with as a woman. If I could help other women, this is the piece. This is the thing that I would like to give as wisdom.
How much time do you have? No. I would say 2 things. One, I think as women, I'm still guilty of this. I'm constantly working on it, but we have this Superman complex of like, I can do everything. And I absolutely despise books like Lean In. I just want to take them and burn them in the trash can. I don't think you can have it all. I don't think it's work-life balance. I think it's work-life choices. And I don't think you can make the banana bread and take out the trash and get the kids ready for school and run a multi-million-dollar company and volunteer at the soccer game. Like, it's just not possible. These are just it's the illusion that everything's possible, but it's not, it's choices. So I would say to ask for help. I think as women, we are uniquely sort of, I'll do it. Sure. No problem. I'll hop in. I'll help out. And you're just kind of like this bobblehead of like, no problem. And at some point it is that you do need help. And whether that's, you can't get groceries, you have to get Fresh Direct. You cannot go to the grocery store, or no, you need to hire that virtual assistant because you actually can't keep track of when your appointments are. So it's getting the help and recognizing that you need help. I think that's 1, unique to women. And I think 2, for me, I've found that I need to have 2 groups of friends, and 1 is other female founders, and 1 is sort of like corporate job friends. Because it's very unique. You cannot go to dinner with all your friends that work at corporate and complain about the same things that you can complain about to other female founders, where you can say, oh, I'm trying to raise this bridge round and these angel investors or whatever. Your corporate friends are going to be like, what? Glazed over eyes. What are you talking about? What? Happy hour? Like, just no concept of what you're going through. And so for me, it's really about having those 2 buckets of friends and utilizing them both in different ways, and both are important, just they serve different functions. So that would be my 2 biggest takeaways as a female entrepreneur.
Yeah, no, love that. Ask for help and 2 buckets of friends with context. Okay, cool. So Sarah, would love to hear your side as well.
Yes, I love that. And I couldn't agree more. It's all about, you can't do everything. You just have to choose 2 or 3 things you're going to do really, really well and forget about the rest, and don't feel guilty about it. It's the one thing I would add is I think we tend to feel bad. Don't feel bad. We've got to make those choices. So my advice is, one, I think being an entrepreneur can be a really lonely thing. And I didn't really realize that because I thought, oh, my coworkers are really annoying. I'm going to love having my own business. But it's actually really, really lonely. Even when you have employees, I mean, it's different. So join those networks early and often, and definitely the ones that are focused on women entrepreneurs, because I have found I just really get something different out of those groups. Okay. And my second piece of advice is really to be yourself. As a woman, plus all the other aspects of your identity, are so important that we have those things in our leadership. And I think women like us that step up and take our chance and start our own company, we're really claiming a transformational opportunity. Women can see themselves in their leadership. And at Leota, the CEO has a penchant for red lipstick and leopard print and a voice of a kindergartner, but I'm the boss. And my voice has the authority. And so representation really matters. Be yourself. The world needs it.
Love it. I think that's like a perfect way for me to segue to the investors. Thank you so much, girls. And I will totally bring you back on for our Q&A and jumping in and out. So I'll get the moderators to help us just click over on the tech side.
Great.
Yes. Thank you. Let's give everyone, Kim and Sarah. That was awesome. I was muted, but I was like yeah. vibing so well with all of that. I'm going to roll in Avery, who I just realized now we didn't give her an introduction. So let's have her share her story real quick. And then we'll bring the founders back on for a Q&A later. So thank you, girls, so much. This was amazing. And we'll bring you back on here in a little bit.
Sounds good. See you soon.
Oh, I accidentally kicked out Kim or Vicky. There we go. All right, Avery should be coming on. Let me get Vicky back in here. Hey, Avery.
Hey. See me?
Yeah, sorry about that earlier. We were.
Oh no.
We were so eager to jump in, but let's have you.
That was great.
Let's have you introduce yourself and your story and everything and how you got into investing.
Yeah, cool. Hello, everyone. I'm Avery. I'm on the investment team at Firstmark Capital, which I'll tell you about in a second. A little bit about my background. I'm from New York. I studied computer science and then did consulting and was very eager to find a way to work with startups and be in the tech world and found my way to Firstmark, which is a very great New York-based venture firm. I hope you all look it up afterwards, but we do seed and Series A investing across the tech landscape, so both consumer and enterprise. And we do, a lot of work to be extremely founder-friendly and provide a host of services to our companies. So you can read about it on our website, but that's a bit about us. And it's unique that we're in New York and we're all based here.
Definitely.
Although right now everyone's remote.
For sure. I'm dropping a link in for people for Firstmark Capital. What's the best way for people to get in touch with you real quick before we jump in here?
It's just my first name at our website. I can drop the email in, my email in afterwards.
Great. Okay, fantastic. All right, I wanted to give you the opportunity to do that real quick.
Yeah.
Let me bring back up here Erica and Vicky. Okay. Hey, Erica. Hey, Vicky.
Hi. Okay.
All right. I'll let you take back over, Vicky.
Great. Thank you so much. Okay. I'm so excited to have these two women on just because I want to dive straight into some useful investor insights for anybody out there raising capital, thinking about raising capital. And I want to start with, going straight to what is wrong with founder thinking today. So I would actually love Erica to start with this question.
Yeah, sure. When we did the panel prep call, that like seemed like a really relevant question. I feel like now, the world has changed so drastically. I think everyone's thinking on everything is going to be really different. Mm-hmm. It's amazing how things can change in just 1 week. I think that, a lot of the things that we sort of talked about before are not really going to necessarily be issues for people going forward because, basically we're going to see really just, I would say, capital markets being closed at all levels. So not just for early stage founders, but also we have the biggest public companies in the world that usually have tremendous access to capital, effectively completely being shut out. So I think it's kind of a really different story now. I think if we want to talk about, in hindsight, what really was kind of wrong with founder thinking is that, I think a lot of people did think that the capital markets were going to be open to them, unconditionally for the foreseeable future.
Case in point.
Yeah. And, anybody who's worked on Wall Street a really long time, I've worked in finance since, 1998. I started in investment banking, was a traditional investment banker until about 2006, which is when I got involved as an early stage venture capital investor. And I think that, for older folks who've been through many market cycles, so through long-term capital crisis and through, 9/11 and through, the 2008 debt crisis, realizing just how quickly things can change and that there's zero visibility generally when it happens, hello, everybody else, now, you get your crisis. So I think that probably, one of the big issues that we've had with founder thinking is that, it is sustainable to build a business that can rely on infusions of outside capital kind of indefinitely, and that it's going to be Series Seed and Series A and Series B, and, not really sort of thinking about sustainability, perhaps with more measured growth. So I think that, that kind of risk taking for some companies is going to result in, tragedy and a lot of pain right now. But for those companies that have been a little bit more measured in their approach, and I guarantee you, I bet those companies that have been more measured, we're going to find out have female founders, are going to be much better equipped to weather the storm and weather the downturn because they haven't artificially leveraged themselves with investor capital that's going to end up creating problems in a capital constrained environment. So completely different answer to your question versus when we did our panel prep, but the world is just throwing us all sorts of exciting curveballs right now.
But I think that's important though. I think the important thing that founders need to remember is that you have to be constantly adapting to the market. And I love that you brought Corona straight up. We spoke about, risks and crisis and how do you have resilience through that process. I would actually, really love to take that from the first mark approach. Avery, how has this crisis affected the way you guys are thinking about deals and the way you're assessing founders or the advice you're giving to your portfolio companies at the moment?
Yeah, it's a great question. I think everything is certainly kind of still in flux. I think people are responding every day. I would say, the initial response definitely flipped more towards the portfolio and let's kind of readjust for 2020 to the new reality that's in front of us. But I think that most venture firms are, for now, hoping to stay open for business. And I think there's a little bit of a mentality that if you can build a great business in this environment, it's going to be a really long-lasting, amazing outcome. So, I think it will have an effect in terms of what types of new deals are happening, but certainly people are still looking for opportunities and, knowing that this is going to be a time and a year that will be hard on a lot of companies, trying to be, a resource and a partner to those companies that, are taking a sustainable long-term view and approach, but potentially are left in a strange position right now just based on the very suddenness of the kind of market dynamics. But it's certainly like it's an everyday kind of conversation.
Yeah, no, I agree. We're definitely doing the same thing at our firm as well. It's something that we're talking about every day. Talking about, I know we have this massive spike or this outlier in what's happened, but how are we looking at in terms of averages around the deals that you both see? Would love to hear a little bit about valuation ranges, round sizes. I know it's, let's call it a week before the crisis hit, so that we just have a better sense of, I guess, where the world was going in regards to that conversation. And only because we all know that women usually are actually receiving lower valuations compared to men for the same metrics. So would love to actually hear your perspective around that, and if you agree with it, if you disagree, and speaking broadly about deals, but also specifically about women. Happy to start with either.
Yeah, I mean, I think definitely, you know, one of our kind of investment thesis. Oh,
everyone's gone.
Okay.
No, they're still on. I just.
Oh, I see. Okay, we were just confused by that. Sorry about that.
You're good. You're good.
So, you know, I definitely think that there's been a really strong investment thesis going around that, you know, clearly there's value to be had in women-led businesses. You know, I will definitely say that, you know, over the last couple of years, sort of, you know, up to Q1 2020, you know, I was seeing what I would call a little bit of an uncomfortable uptick in valuations. You know, I'm old school New York City, so I prefer to see, you know, sort of seed round valuations happen a little bit lower. And not just, you know, from an investor perspective, but also because, you know, I always tell founders, I'm like, listen, you know, if your rounds are appropriately priced, it gives you some room, you know, to do your next round at a significant, you know, increase in valuation, and to, you know, keep your investors happy and to kind of show that momentum. And I do think that, you know, I was seeing things get, you know, a little bit higher than I would like, but unfortunately that was the market. So we just kind of had to deal with it. But I would say that, you know, on a relative basis, when you're looking at valuations between kind of 5 and 10 million, you know, it's still kind of a 25 to, you know, 60% increase in overall valuations for early rounds. And not necessarily always commensurate with round size, right? So for companies that are kind of raising that first, you know, $1 to $3 million, we saw strengthening valuations. So, you know, clearly that's going to go down. You know, while, you know, I know that funds that, you know, VC funds that have capital they need to deploy, you know, are still going to need to deploy it. You know, it's eventually, you know, hopefully going to come out. But I think as far as the demand that's sort of driven these increases in valuation really comes from investors being more interested in allocating capital to sort of earlier stage venture capital, because they're kind of chasing yield and returns, which we really didn't see in the public markets for a while, because, you know, everyone kind of knew a lot of public market securities were getting to be overvalued and there just wasn't that return potential there. So as, you know, the return potential, you know, now comes back into the picture, you know, clearly there's room for the public markets to rise significantly, you know, if you have sort of a long view of humanity. You know, that money is now not necessarily going to be as available for early stage venture. So we're clearly going to see a contraction in valuations. You know, whether or not that affects anything in the long run, I don't think so. You know, I think that at the same time, you know, we know that really great companies are going to get funded. You know, some, like we just mentioned, some of the best startups have been started during a crisis or shortly after a crisis. But, you know, we are likely going to see a contraction in valuations just because the supply of capital is almost 100% surely to contract as well. So we'll probably see that coming down a bit, which I think is good for the market.
Yeah, so I totally agree. I think in terms of averages, if it's helpful to give numbers, I think, you know, seed rounds are still getting done maybe in that 5 to 10 range. We've definitely seen some Series A's price kind of closer, you know, in the upwards of tens of millions, which was atypical before. So I would say even like the increase over 2019 into 2020 was pretty stark. And I totally agree with Erica. A lot of that had to do with a flood of new capital to the private market. So there's a ton of dry powder and there's a ton of people who are kind of chasing returns by just going earlier and earlier. And they have big funds. So they're kind of willing to do things willing to do big rounds at high prices. They're relatively price insensitive. And I think obviously this situation is going to change that. And, you know, we're already seeing prices totally move in the private markets. The other thing I guess I would say about just valuations and a little bit towards female founders is I think something that people struggle with, you know, the first time they're raising capital is like this whole notion of what title every round gets and what's a pre-seed, what's a seed, and what's an A. And, you know, I think that's another thing that along with valuations has changed over time in terms of, you know, it used to be if you raised $1 million, that was a seed. And now people will call that, you know, like a pre-seed or an angel. And so it gets a little blurry what means what. And I think one lens to look at that through is just that the amount of capital you raised relative to your traction is still something people will look at. And there are outliers. There are cases where people don't care if there's no traction. But I do think that people can work themselves into a trap by saying, oh, I'll just raise a little bit more. And then you end up in a place where you've actually raised, call it $7 million and your product just launched. So I think that to some extent, I think that this situation will bring a discipline back to the early stage markets that was probably, you know, leaving in a bad way over the last year or multiple years. But I think that's one lens to think about kind of the titles. And Vicky, I think we maybe talked about a little bit of like, people want to maximize for valuation, but you can get yourself into a trap that way because it's hard to convince the next round of investors to do a flat round if they don't want to do a step up, that isn't great for your existing investors. So, you know, there are multiple considerations when you're thinking about valuation. And I think that it's important to kind of remember all of them.
Yeah, no, I really appreciate both of your comments on that. I think valuations, like the number one question I get from founders around what size, you know, what size is around, what's my valuation, how do I determine that? And really it's more of an art than a science in the early stages, and really understanding the broader market is important, which is why I asked these two investors to tell you how they're thinking about it. So I love that, you know, the 5 to 10 was kind of a common theme in the seed stage in terms of vows, and the amount raised.
And also we just have to be so careful with the language because 5 to 10 would be probably like what used to be called a seed. Now people just, you know, people just keep like pushing the terminology out and out and out just to like make themselves look good. So it's so hard. But, you know, we're saying basically your first kind of like $1 to $2 million raised would probably happen around that valuation.
Great. And thank you so much, guys, for letting me go deep and ask the hard questions, because I know it's super helpful for founders out there. Just a follow-up question to this fundraising side, you know, what metrics are you tracking when you consider an investment, and what advice do you have for founders raising money if they wanted to come and raise from you?
Yeah, I'm happy to go first. So for us, like we're primarily Series A. We do seed as well. And I think at that point, you know, usually there's some signal of revenue traction. So we are looking for some, you know, numbers and growth. But I think that outside of metrics, I think one thing that we're always looking for is obviously team and all those things, but a little bit more on like the vision side. I think oftentimes you either lose pragmatism or you lose vision. And I think it's hard to balance the two. So having a pitch that's both, you know, there is kind of like the lofty, spicy thing at the end of like what this could be, but having a very clear kind of roadmap for the next year. So balancing the two in terms of like, this is what we're going to do for 18 months, but also having, you know, the long-term vision.
Great.
Yeah, and just to, you know, sort of talk a little bit about that. I mean, you know, we're coming in, you know, obviously before Series A, you know, but what we're typically looking for is, you know, evidence that, you know, whatever the company is, we're kind of expecting they need to get to around, you know, $100,000 in monthly revenue in order to support a Series A. So, you know, what evidence do they have to show us that that's where they can be in, you know, sort of 12 to 18 months, hopefully. But, you know, for every business, traction is different. But I would say that the most important thing that we're looking for as kind of like true seed stage investors is, you know, have they established product market fit, right? And have they, you know, figured out customer acquisition channels that are deep and are scalable. So those are sort of the two things that, we really want to see. I think that, everyone can sort of recognize a really great opportunity when they see it. I think that what people have a hard time doing is recognizing when things are going to be problematic. And I think that, one of my biggest indicators of problematic companies are companies that are chasing, they use the word scale prematurely, and they're chasing growth before they've actually achieved product market fit, right? They're so focused on getting more and more customers that they don't realize the customers that they already have, don't really care that much about their product. Right?
Yes, I know exactly what you mean.
Number one way to destroy value is to try to sell something that people don't really want to people. It's a disaster. So I'd rather see, a founder at the early stage kind of go very deep and understand, who is my customer, and I want that customer to love me, need me, and be highly engaged. And I want to know exactly how I acquire that customer and exactly what I pay to acquire that customer. And then you should be thinking about, okay, now I've got a toolkit that I can dump money into the top of the funnel and actually create value. So that's really what we're looking for at the end of the day.
Amazing. And look, thank you so much for both of your comments around the sticky, hard questions I asked you. I would love to move us to, Q&A. I am wondering logistically how we're going to do that. So I'm wondering if the organizer could help us. There we go.
Hey. So I'm thinking actually what is going to be easiest is if we can just do some there's some questions already here for the investors that I've seen.
Okay.
So we can do a couple of these real quick while we have Avery and Erica on. And then we can bring up the founders to do some of the other questions. So the first one here, VCs have pushed founders so hard to grow top line at all costs, reviewed all the budgets and spending. Are you seeing any accountability from investors on this? And that's from Sarah.
Yeah, so if the question is people who grow at all costs and are now a little bit left in the lurch, are investors being held accountable? I think that's exactly right. Yeah, I think that there's, first of all, kind of two stories. I think there's what you hear in the news and the market, and then there's kind of reality. And I think, a lot of venture firms certainly get heat for pushing companies to grow, but a lot of venture firms also care a lot about unit economics and growing profitably and pushing towards that eventually, because you have to believe that for that company to work long term. And so I think right now we're probably in a moment where companies are relying on their investors to help out. And, I think the good investors out there are truly partners to their founders and their teams. So whether that means, supporting them through a 2020 that doesn't look like what they planned, I think that people are ready to do that. And I think it's maybe less of I would call it accountability, but I think everyone that's been in the same boardroom knows the conversations that led up to that moment and can kind of be an adult about it and take the responsibility for where they are, if that makes sense.
Definitely. Erica, you have anything to add?
I think that was the answer. Maybe we can move on and we can answer a few more questions.
I agree.
Okay, great. So the next one is, and this is probably something that we can ask the founders too. What are some of your advice for entrepreneurs and their strategy reaching out to VCs or angels? Are there any tips, strategies, things that you've seen that you've really liked when entrepreneurs have reached out to you, whether that be cold email, contacting you on LinkedIn or Twitter? What are some strategies that you like as an investor that you see from entrepreneurs doing?
Yeah, I think that the important thing to kind of recognize is that, it's a relationship. So, most of the entrepreneurs that I end up having a really successful relationship with and end up actually, investing in are people who, they don't just sort of reach out to me and pitch me for capital and be like, yes or no, right? You actually get people who literally do that. And it's kind of the most ridiculous thing. So, the smart thing is to start reaching out to investors that you respect early and start building a relationship with them, right? Because, it's particularly at the early stage. So when you're kind of at like maybe Series A, but, certainly Series B and on, people are now looking at, historical financials and reasonable projections and spreadsheets and data and numbers. And, the relationship is important, but it's not quite as important as in the beginning. So in the beginning, you have to realize, number one, I've got to build a relationship with this person that shows, number one, that they can trust me, right? That I'm somebody who, stays in communication, provides updates, is coachable and, understands how to take advice. And then also number two, as you're building a relationship with that that investor, you're going to be able to get a sense of whether or not they can actually be value add to your company. So, if you schedule a call with an investor, you're reaching out to them in whatever way you manage to eventually, get a bit of their time, you'll now be able to, number one, get sort of advice and feedback and start that relationship in a really authentic way. But you'll also, get a good sense for whether or not this investor is going to be the right fit for you. So, in the beginning of a company, not only do you need capital and not only do you need, actual sort of business and strategic advice, but you also will need a lot of like emotional support, right? I mean, so many of my portfolio companies, have had to like call me in tears or something, when they're dealing with something really stressful. They're like, my hair is falling out, or like, there's a lot of, just kind of really even, bigger challenges that people go through over the first few years of company. And I'm not just talking about the ones that are not successful. This is the kind of stress when I talk about people being in tears and hair falling out and major trauma, they're raising a $25 million Series B. So it's kind of like whether, things go well or they're, difficult, it's going to be stressful no matter what. So like knowing that, you're finding investors who, are going to be there with capital, are going to be there with business advice, are going to be there with strategic advice, but also that are like people that you can trust, people like have your best interests at heart, who aren't just going to kind of like, run over you, just for the returns, because that's definitely something that happens. So it's really worthwhile to invest the time and energy to get to know them, to like invest that time and energy. And then also, something that's just sort of a little bit more scalable is I always tell people, listen, if you just kind of like send me an email and you're like, here's my deck and, I have some little thing and it's not interesting to me, I'm not necessarily going to be able to respond right away. I probably might not have the time and energy at the moment. But, if you put together, and I think it's, gosh, Avery probably remembers the name of this company. I don't know, I'm blanking on it. It's like something with a V, but there's this, company that allows you to do sort of really simple kind of monthly investor updates, where everyone that's kind of on your list is getting, a little short update with some very interesting little bullet points for keeping them posted on your traction and on what you need. Those kind of things are very valuable because what they allow you to do is sort of simulate an existing relationship with that VC so that when you do reach out to them, in a couple months, they've already seen your name 5 or 10 times. So, they might accidentally think they actually know who you are. So that's another really great tool.
Yeah, it's called, real quick, it's called NFX. I'm going to drop a link in.
I was actually talking about Visible, but I'm sure they're...
Visible. Oh, sorry. Yeah, so NFX, they have a thing too.
I'm sure there's heaps.
Called The Brief as well. It's okay. I've had way more luck personally reaching out just directly to investors. And the craziest thing that I've noticed too is like Twitter is like where the like tech and VC like people are. Like they are not on LinkedIn or anywhere. Like they're the most active on Twitter, which is like something that I just kind of realized this year. Which is I just wanted to throw that in really quickly too. But yeah, I thought that was fantastic advice.
Also, one quick thing on that. It goes to the point about visible and the point about actually building a relationship is I'm fine with cold outreach. Like I cold outreach to people a lot. So like it would be hypocritical to not be okay with it. But there's a big difference between like a clear kind of like not spam, but like mass email and something that's just a little bit personalized, which is, it's like advice 101 in any job, I feel like. But to kind of do a little bit of background checking and figure out why you think you want to work with that person and then just mention that, I think actually just that's like filter level 1. And it actually, it cuts out 75% of the noise in terms of whether people have looked into kind of what your firm or what you do beforehand.
I agree completely.
Fantastic. All right, let's get into, we'll do one more quick question here for the investors, then we'll bring the founders back up, Kim and Sarah. So we have here from Mike, what is your typical timeline when you meet a founder until you make the investment? I know obviously like every business is different, but do you guys have a typical like due diligence process? On average, like how long does it take for when you first get into contact with someone until you guys make an investment?
I guess I'll answer that from my side. Our process is a little bit different. I would say realistically, frequently it ends up being a little while, because usually I kind of have already met the person in some shape or form. So like, for example, we're working on a Series seed investment right now. The company, I first met the founder last year in the spring, right? So it's kind of like relates a little bit to what I said about, start that relationship early because, when he was kind of doing an earlier, smaller round, I want to say it was like spring of, what was it? Maybe even like summer of 2018 or something like that. I gave him some really great advice. I said, here are the different metrics that you need to hit. When you've gotten there, come back to me and we'll get this going. And, I've had companies where I meet them. I'm like, here's what you need to do. They execute over a year. And then when they come back, at sort of a year later, then we can get the investment done really quickly. I would say, probably in a matter of weeks. So, part of what I do in my business is identifying those people far before they're actually ready for capital, so that, you're actually there ready to kind of like write a check and fund it when they've actually achieved that. And at that point, it happens really quickly. But ideally, and I would say that, in at least like 75% of the cases, I've been building a relationship with that person for quite a while, a year, maybe even 2 years before we write a check. But once it actually goes into diligence, it's, a matter of a few weeks.
Okay, great. Let's bring Avery. Do you have anything to add to that?
Yeah, definitely. I need to pick Erica's brain because I think everyone in Venture is always trying to figure out how to find the best talent before they actually need capital. So for us, it varies. So because we do seed and A, we sometimes are in the position where we've looked at something at the seed or it was too early for us, but then a year later we've built that relationship and then can do the A very quickly. But I would say that for the majority of kind of like the Series A deals that we do, which is kind of our bread and butter, that typically can be, it's compressed over time. It would typically happen in the course of like 2 to 3 weeks. So from first meeting to kind of like second meeting and diligence and then doing kind of a partnership presentation, it's somewhere around 2 to 3 weeks.
Okay, fantastic. All right, thank you so much. That was amazing. We'll bring up everyone at the end real quick just to like say, final thoughts and everything. But let's bring the founders up now. Let's give if everyone can drop some emojis and stuff in the chat for the investors and drop in some amazing information. And we'll bring you Avery and Erica back up at the end. But thank you so much. That was incredible.
Thank you.
All right, let's get, give me 1 second here. All right, Vicky's gonna come back on screen. I'm gonna come back on screen And then let's get Kim back up here, and let's get Sarah back on. If you have questions for Sarah and Kim, drop them in now, and we can ask them while they're on here. Give me 1 second. Okay, I think Kim is on. Let me get Sarah. Welcome back, Kim.
Thank you.
I don't know if you have any advice real quickly to add to the investor talk. I know you've probably dealt with that.
I bootstrap, so no.
Okay. So you've gone the non-venture route, and
yes.
There's absolutely nothing wrong with that, and you actually probably own a lot of equity in your company.
Oh, so yes.
Yeah, and I think Sarah's the same way. Sarah, have you raised any capital, or have you bootstrapped as well?
I bootstrapped my company, and I worked with factors and loans to grow my business. So that's why profitability was so important to me from day one.
Yeah. So you took on debt, which is another strategy that I think a lot of people don't recognize now as still like that. There's a lot of value in doing that if you can, because you can get a loan at a really good rate if you have good credit, and then you can keep your equity and grow the business. So,
may I ask, do you actually have ESOPs at all, or is it have you considered that for employees?
We don't have ESOPs, and I think there are other ways of doing it that nowadays that are a little bit more beneficial for employees and the owners. But I have given equity to key senior employees. And so that's how I've been able to attract top talent who've really scaled up the best e-commerce companies in the world to join a little company in New York City run by me, because I'm willing to let them have a little skin in the game with me so we can scale this thing.
Got it.
Yeah. That's awesome. Fantastic. Well, let's jump into the first question we have. So we have from Conrad here. Now that you have an established business, do you outsource any solutions to streamline internal processes? So do you hire people to run everything, or have you guys outsourced to any agencies like HR, PR, anything like that to help streamline some of your business processes?
Definitely. I think Kim was saying that she loves doing that, and I totally agree. Like, any department that I cannot have on payroll, bring it on. So we still outsource HR, legal, some small amount of business consultancies. So anything, all our digital marketing is outsourced as well. I used to have sales reps handling our sales, but that's something I decided was important for us to bring in-house. So what I had to do is decide what are we really good at, and what's our core competency, and make sure that that is always in-house for the company, and everything else we let somebody else do. So one good example of that is fulfillment. Yes, I packed and shipped every order for the first year I was in business, but obviously that doesn't make sense when you become, we just shipped our millionth dress. So obviously that's the type of thing that we outsource. But one cautionary tale on this, and that is, how many emails do you get a day? Like, hey, can I have 15 minutes of your time? Or, hey, quick question. All these people trying to sell you stuff. Have you guys noticed this as founders? As soon as you have a brand or you have a company, everyone wants a piece of it. So it's important to be very cautious about the outside contractors that you do bring in, because I would say most of them are probably not worth it. What do you think, Kim?
Yeah, I mean, I think that there's things that you can definitely outsource, payroll. Obviously, there's TriNet, there's ADP, there's tons of PEOs. And then I personally think there are things that you can't outsource or is not as strong. Been in this business for 9 years, and I have yet to meet a founder, whether that's a female or a male, that is going to be not as good as a PR firm when it comes to representing themselves. Like, you are the founder, you are the brand. So at the end of the day, you know, you pitching yourself to those big outlets and you pitching your own story, and it's coming from you and it's not coming from Bob at Sunshine Sachs, I think it goes a lot further. And so I found that PR with a lot of my other founder friends is something that they try to hire out, and maybe they dabble a little bit, but at the end of the day, it's really something that when you're doing it yourself and you're doing those personal outreaches and going to be press people for coffee or talk to them, you know, at times when you're not launching something, and building those relationships yourself is what really is going to be the game changer. So I think there's definitely things that you can outsource and take out. And then there are things that I think always, for better or for worse, with you as the founder, you're just going to be the best person for the job.
Smart.
Fantastic. Yeah, let me come back up here. We'll get into our next question. And I got to bring Sarah back up here too. There we go. Okay, so we have another question here from Rachel. What resources, print, virtual, and otherwise, can you offer female entrepreneurs? So I think we got into this a little bit earlier. I know Sarah and Kim, you guys talked about, you know, women groups and mentors and these types of things. What other resources have you found really valuable? And that could be like, you know, books, courses, podcasts, like events, like what things have you found that have helped you, or that you've seen as a resource to help female entrepreneurs? And, you know, this is a big thing for us too at Entre. Like we want to be a really big resource for female entrepreneurs and do more events like this. And, you know, with our app coming out, we hope that we can really help connect entrepreneurs together. So, you know, hopefully we can be one of these resources, but you know, the app doesn't exist just yet. So share with us some of your tips, Sarah and Kim, on, you know, what resources you've both used to grow and start your businesses. And well, Vicky, you can chime in as well too, because I'm sure you've gone through this as well.
I can't wait to get more involved with Entre. It sounds amazing. I've been involved I was a member of Entrepreneurs Organization for a while, and there's just not very many women in that group. And so, and it's just not very diverse in general. So I think having that diversity across age, gender, sexuality, ethnicity, all that stuff is so important for me, because if we don't get a broad range of perspectives, then we're toast. And my main resources really come from reading. I read, well, of course I read books, but I also read books on 1.5 speed in the shower. Okay. Listen to them on 1.5 speed.
Hold on. How do you read in the shower? I gotta.
Or sorry, listen to audiobooks in the shower.
Okay, here we go.
At 1.5 speed. Because have you ever noticed that there's just absolutely no time when you're launching and running a business? There's no time at all. So we have to pack it in where we can. And I think one thing that I missed out on in my entrepreneurial journey was really how to protect myself. So now I tell people, use protection. And what I mean by that is get a prenup, have a rock solid agreement with your business partner. I don't have a business partner, but I think that's so important. If you're going to start your own business and before you quit your job, make sure that you have amazing credit and buy your apartment or buy your house first, because once you have your own business, like, forget about it. No one's going to give you any credit for anything. And these are the sort of things that no one tells you, because it's so fun to go on that growth journey. That's the exciting part.
Right.
There's so many resources for the growth part, but what about the hard times? No one wants to talk about that, but we've all been through it, and we're all going to be going through it now. We're all going to be losers for a while. So having resources around downside risk, I think, is really, really important. So I'm reaching out to my attorneys, my network to really figure out what to do in these times. But I've already done a lot of that work. So I really encourage people that are early on to think about that. What about you, Kim?
Amazing.
Yeah, I mean, I think for me, my top 3 sort of biggest resources are one, this thing, my phone. So I follow other founders on Instagram. I follow accounts on Instagram that I think are really helpful and motivational, whether that's a Tim Ferriss or a Gary Vee, or I always tell people all the time, like, please connect with me on there if I can be a resource for you. I think we're all going to have to band together now more than ever, I would say. So Instagram is a big one, just following other founders, seeing what they're up to. I think LinkedIn is huge. LinkedIn is completely underutilized right now. I think you should be connecting to as many people as possible and asking for help on there as much as possible and being helpful to other people. So I think LinkedIn is an amazing resource to get information, to get help from other people. And then I think just other groups that you can find. I know one that's specifically female focused is called Dreamers and Doers. If you haven't heard of it, I would check it out. You can literally just Google Dreamers and Doers. It's a female group full of female entrepreneurs or female mover and shakers that are intrapreneurs. So sort of that entrepreneurial spirit at big corporations. So that's another one and that one's only female. So I'm in some groups that have guys too. We love guys. But that is one that is just specifically for females. And then of course, tons of podcasts, tons of books. I've written a ton of my favorites. I won't bore you all with them. And if you want to know them, you can DM me on Instagram and LinkedIn. I'm happy to share that list with you, but there's a ton of good ones.
I've actually got some as well. Hi, yeah, so I wanted to chime in here. I think they both spoke about some good resources there. Obviously, I'm doing She Syndicate for that reason, but I actually wanted to talk about something that I learned in the last 3 years, so sort of later in my career, is that your biggest resource is yourself and your own self-dialogue. As an entrepreneur, so much of what you do in terms of strategy and decisions are made with your gut, and often you make decisions where everyone around you, your mentors, your advisors, would tell you it's the wrong thing, but for some reason, it's the right move. Your intuition sort of kicks in. I think having the time, spending the time and actually scheduling in, I guess, self-care and self-awareness allows you to actually increase your ability to intuitively make strategic decisions, because a lot of it is really knowing yourself and knowing what the right step is. So I would say as a resource, really looking at ways that you can embed that into your routine. I found a full focus planner by Michael Hyatt. I really enjoyed that as a daily routine to plan my day the night before, but every morning actually make sure I'm spending time writing for 20 minutes, really fire hosing a piece of paper. All my business models, all my answers come out in that 20 minutes in the morning. And it is a ritual. And I highly recommend it to anyone running their own company.
Smart.
Amazing. Okay. Let's get into, we had a question about the entrepreneur. What's your favorite entrepreneur book? So we can have everyone answer that really quickly. And then let's bring everyone back. We'll end with another question as well, which is, we'll do the book, and then we are going to, someone also asked, what's the most important thing you're working on right now as well? So let's do the book, and then we'll have Kim and Sarah answer any, what's the most important thing you're working on, and any final, pieces of advice or words to live by. And then we'll bring Erica and Avery back up.
I'll kick off. I have two favorite books that's tied. One is Hearts, Smarts, Guts, and Luck. I think there's three authors, so I can never remember them, but it's Hearts, Smarts, Guts, and Luck. I can put it in the chat here. I'll find a link. And the second one is The E-Myth Revisited. That was mine. Yeah, classic. So I'm sure that's but
So good.
It too.
Yeah, eMyth is really, really incredible. I'm gonna drop, as you guys are talking, I'm gonna drop some of these links in as well for this.
My two top books. One is Radical Candor by Kim Scott, which tells you how to give tough feedback and still be a good person. That is so hard, especially as a leader. You are constantly nudging and giving feedback, how to do that and retain your humanity. And the second one is Traction by Gina Whitman, which kind of takes the eMyth a little bit further and gets into how to really operationalize your strategy. And it talks about how what gets measured gets improved. That's the key to growth.
And the first one was Radical Candor.
Yeah, Radical Candor by Kim Scott. Must read.
Okay, great. How about you, Vicky?
eMyth Revisited is definitely up there. That was amazing when I was a CEO of my own company, and that was, it just really teaches you how to, I guess, think differently about your different roles, the different hats that you wear. I also like, this is not really an entrepreneur book, but Think and Grow Rich by Napoleon Hill, only because it teaches you how to set a goal and have single-minded focus on it. So I definitely recommend that as a read, just in terms of goal setting and just really understanding what it takes to get something done, having to close your back doors.
I love Napoleon Hill stuff. Mine would be like, I love Law of Success. So it's very similar to Think and Grow Rich, but it actually goes a little bit deeper.
Oh, yeah.
But like the big thing in there is like the chief aim, right? And having one thing that is like you're obsessed with and you're focused on. If you look at anyone who's done anything of massive success, they've been extremely focused on achieving one thing. And it's extremely important and something that I think everyone should think about. Kind of goes back to like the Simon Sinek thing, like why, having that like one thing that you can keep going back to is huge. So, okay, great. And then let's do final, advice, tips, for entrepreneurs, all the female founders and aspiring entrepreneurs. Any words to live by, favorite quotes, or anything that you can leave us with?
Well, my favorite quote is by Ani DeFranco, who's my favorite musician. And she says in one of her songs, "I don't care if they eat me alive. I've got better things to do than survive." And I bring this up because you have to be super hardcore to be an entrepreneur. You have to be a complete and total badass. And so we can't be afraid. We can't take it easy. We've got to be just absolutely as badass as possible, especially when we're facing the unknown. We never have enough time to get to the exact right answer before we have to act. So don't wait. By the time the true best answer has come, we probably missed the opportunity. So plan and act at the same time. And we got better things to do than survive. So go for it.
Amazing.
The last thought that I'll just kind of leave everybody with is I have learned a very important lesson as a female entrepreneur, and I think probably most female entrepreneurs feel this, but I would say to start treating yourself like a third person. I often find the easiest person to cancel on is me. Like, I don't need to go to the gym. I don't need to do anything for myself. I'll just give. And my cup, it's not even like my cup has no water. It's like my cup is broken. I don't even have a cup to add water to the cup. Because I cancel things that are for myself all the time to give to other people. So now I actually have dates in my calendar that say things like gym with an hour blocked off. My whole staff laughs at me, but there is an hour blocked off for lunch because there are some days where I am so busy, so overscheduled that it gets to 4 o'clock and I'm in a meeting and my stomach starts making noise and it's really embarrassing. And I'm like, oh, that's right. When's the last time I ate? oh, at 9 a.m. And that happens, especially in the first couple of years of entrepreneurship. So I would say treat yourself like a third person. And if you wouldn't cancel a meeting with somebody, which hopefully you wouldn't unless you had a very good reason, don't cancel meetings with yourself, whether that's the gym, whether that's eating, whether that's calling your mom or your dad. Don't cancel on yourself. You are the most important person in the business.
I love that.
You should name your book that.
Yeah.
That's your book title.
Self-care is huge.
Yeah.
And you have to prioritize it or else it's not going to happen. And it's so critical. So Vicky, how about you? Do you want to add anything on?
Yeah, definitely. I think one of my, I'm a typical type A achiever, right? My self-worth comes from my work because I can't help but go all in. It's just the type of person I am. Most entrepreneurs are. I think, what, I'm still learning this, but this quote I love, and I literally have it stuck on my wall. It's not what you do, it's who you become. So my goals are so big. Like right now, my goal is to raise $3 to $5 billion. It's a gigantic, enormous elephant goal that if I look at the beast straight in the face, it freaks the hell out of me. Like I just get so scared and so much self-doubt on a daily basis. So therefore, what I have to do is I need to break it down and choose a process goal or a trigger goal just before. So it might be, for example, it's more about building character. So I'll say, okay, you have to do, your highest priority task, and that's what I check off. It doesn't matter what the task is, but I actually measure that as my mark of success. And so once again, it's not what you do, it's who you become.
Love that. That's kind of similar to, I think, Ben Horowitz just he just wrote out a new book called "What You Do Is Who You Are." But yeah, I think that's incredible. Okay, fantastic. Let's bring up Kim, Sarah. Thank you so much. Is there anything else that you want to share with everyone before we bring Erica and Avery back up and wrap up here? Do you want to drop in any links where people can find you? What's the best place to get in touch? Your social media? Where should people reach you?
Yeah, I'll drop that all into the chat. But I have a lot of free time, guys, so feel free to hit me up. I have nothing to do but talk.
Yep, and check us out on leota.com and feel free to reach out. I'm here for you.
Thank you so much. We really appreciate that. And yeah, I think now's a really great time to try and connect with all the people that you want to connect with, because you know where everyone's at most of the time, and they're going to be looking for things to do. Definitely take advantage of reaching out to these amazing women here, and they're super successful. Take advantage of that. Thank you both so much for coming here and being a part of this. It was amazing having you. Hopefully we can get you to speak at one of our live events in New York sometime when all this calms down, but we really appreciate having you both on.
That would be great. Thank you so much. Thanks, everyone.
Thanks, girls. Loved it.
Okay. Vicky, you're going to hang on with me here.
No problem.
Let me bring up Avery and Erica. Here, give me 1 second. Okay, if you guys have any final questions or anything, now is the time to ask them. We're going to be wrapping up here in the next 5 minutes or so. We're just going to bring Erica and Avery back on one last time to give their final pieces of advice, their favorite books and resources as well.
And I will not speak twice, I promise.
That's okay. You have so much to share, so I'm sure everyone is okay with that. Hi, Avery. Let me see if we can get Erica back up here. There she is. All right. So I think dive into we had most important thing you're working on, and any like books that you would recommend for entrepreneurs or investors too. I mean, I'm sure there's a lot of people in here that are interested in investing at some point in time, becoming angel investors and whatnot as well, because entrepreneurship is usually that path to becoming an investor too. So would love to hear your thoughts on books, and then what you're excited about right now.
Sure, I'll go first. I love that Sarah had an Ani DeFranco quote, by the way. That is also my fave. It actually reminded me of an Ani DeFranco quote that I love, which is, "I was a terrible waitress until I started to write songs," which I felt like just a good poetic way of putting if you're asking the wrong questions, then you're not going to get positive answers. On the book side, I don't love business books. I'm sure I'll read more over time, but I do love Shane Parrish's podcast, The Knowledge Project, which just explores different mental models. He interviews investors, entrepreneurs, all types of folks. And I think he does a really good job of kind of getting to how they think about things, and actually frames things in a way that makes them more kind of replicable in your own life. So I really like that podcast. He also has a blog and kind of does long reads. And then in terms of what I'm excited about right now, I think honestly, just making sure everyone in my life is safe and sound. And then on the investing side, I think, what are the opportunities once things slow down, and, who can we partner with that we think has long-term potential in this type of market, kind of after we get through the portfolio.
Thank you. Yeah, that was awesome. I totally agree with that. I think everyone should, get their family safe and sound and make sure that's top priority. But yeah, that's amazing advice. Erica, how about you?
Yeah, sure. So I have two favorite business books, which, so the first one, these are really well known for anyone doing a startup. So the first one is 0 to 1 by Peter Thiel. So even though Peter Thiel is an absolute vampire maniac, it's still a really good book. I'm kidding. Anyways, that one I love. And then Eric Ries's Lean Startup is also just an absolute classic. So I think anyone who wants to sort of get back to basics on their startup thinking, those are two really great books to read. As far as, what was the next question? Just general life advice?
Yeah, one of the questions was so there's two questions. One was, what are the resources right now that you'd recommend for female entrepreneurs? And then the other one was, what's the most important thing you're working on? So really just anything exciting going on in the world, or that you're interested in.
Sure. So resources that would be great. I want to let everyone know that I do a monthly investor training webinar for 1,000 angels that anybody can sign up and register for. It's mainly geared towards investors, but I always say, it's two sides of the same coin. So if you're trying to come onto a webinar learning about how investors are thinking about your company, you're going to understand, how you need to think about your company to raise money for it, or, to think about growing it. So would absolutely recommend anyone check out that webinar. We do them live, but I also usually will upload recordings to YouTube. So you can find tons of resources on the 1,000 Angels YouTube channel as well. Something big that I'm working on is, of course, raising money for our next fund. So that's obviously a pretty big challenge, and that I'm looking forward to working on over the next year, and I think is so crucial at this moment. Not only are we going to be in a really difficult environment for fundraising, but these companies are going to need investment capital more than ever. So, wish me luck with that. And I think that, my one takeaway piece of advice for everybody that I think, has never been more real to me than through this coronavirus. So I actually am a mom of 3. 2 of my kids, the older ones, are actually in their freshman and sophomore year of college. So my daughter just started her freshman year at Duke, just joined a sorority, was doing well, having such a good time. My son is in his sophomore year at Parsons, was really enjoying being there. And, seeing how this has been so devastating for them to be pulled away from the projects they were working on and the opportunity that was in front of them. I mean, really just impressed upon me so deeply how, opportunities aren't always going to be there. And, we need to realize that, work might seem overwhelming or challenging or hard sometimes, but even having the opportunity to work and to do work and to focus on something, is something that we need to be really, really grateful for. And I think that, this time of kind of like a slowdown and a pause, is going to really give everybody time to reflect, time to really think about what's important to them in terms of their family and their health and things that really matter. But also to really think about, what are those big things that I always thought, oh, I was eventually going to be able to do it, or I'd do it later, putting it off, to really kind of focus on, when things start up again and I actually have an opportunity to really create something in the world, I'm not going to let the opportunity pass me by, wait another year, put it off to the future. So I'd say that'd be my big takeaway for people in the audience.
Yeah, that's such good advice. There's actually another question that just came in. It kind of pertains to that too, about like what, how are investors thinking about investing in companies given this current situation. You guys kind of have talked about that a little bit, but it kind of also gets into, for people looking to maybe join a startup, do you have any advice for them? Should they be thinking about joining a startup, or should they kind of like simmer down and maybe see how things go in the coming months before jumping into a new startup, just because there's such radical changes going on right now?
I'll let Eric.
Well, I think if you need health insurance, if you need a stable job, if you have fixed bills and you can't, just go move back in with your parents or something, should things go wrong. I mean, this would certainly be a really dangerous time to leave something stable. It's quite clear that larger corporations are probably going to get, bailed out in this financial crisis. My guess is that's not going to be the case for smaller companies. So it might be, a bit of a risky time to, leave your job and join a startup. If you're joining a startup sort of from no BATNA, right, as we say, then I guess it might be a good time to do so. But, right now it's very risky. So, if you're counting on income, it might be better to wait and see until things stabilize.
Yeah,
I would agree with that.
Okay, I think that's any final quotes, words to live by, and then if you could, so Eric, I came across actually the webinar that you posted on LinkedIn. I just dropped the Zoom webinar link in here for people to sign up if they're interested, if that's cool.
Thank you.
Yeah, sure. And then, we'll just finish off any words to live by, final quotes, where people can find you and how should they follow you and keep up with, if you put out content and some of the stuff that you do.
I'm on LinkedIn, Twitter, dropped my email in there. We do have a bunch of stuff that we publish through the First Mark blog, so I would check that out. I think you can probably find it through our website, but it's also on Medium. Should be pretty easy to find. And then there's a bunch of other people at my firm also write a lot of content that I think is actually pretty valuable. Specifically, there's a mini series on fundraising by Matt Turk, which I think it's bite-sized nuggets and it's actually pretty valuable.
Yeah, we actually have Beth, who originally connected us. So she's going to speak at one of our other events coming up here. So we'll have her on. You guys, your firm's amazing, and they do put out a lot of great content. So I encourage everyone to follow them. Any quotes and any pieces of final words to live by?
Yeah, one thing I talked about with Vicky, which I think, it doesn't really hold as well in this environment, but we were talking a little bit about optimizing for learning. So I think literally the example I used was about burning cash on different marketing campaigns. So let's delete that example for now. But it's just about kind of like, I'd rather have a company that's figured out a bunch of things that don't work versus like trying to force one kind of vector of growth or one thing that they're just really tied to. I think you have to kind of be dynamic in the early stages and be vulnerable with what you tried and didn't work, because I think that's actually really valuable as it is in your career and in your life. But think sometimes companies try and hold it really close to the chest and stick with their initial hypotheses a little bit too long. So optimize for learning.
Definitely. Erica, how about you? Where can people find you? Any quotes? Any final pieces of advice?
So my only piece of advice is going to be nice to people, everyone. I know this is like a really stressful time, but as I mentioned, I'm sort of quarantined in a family of 5, and I noticed that when one person's stack blows, it's like a domino effect. So I know it's really hard. Everyone, let's try and be really kind to one another. We're all going through a really hard time, and even though we have to social distance, people appreciate a smile. Any act of kindness you can do is great. As far as finding me, would love for you guys to sign up for the webinar if it's something that you're interested in. Like I said, we do it once a month. You can follow me on Instagram. I posted that in the chat. And you can also follow me on LinkedIn, where I occasionally write articles and upload other sorts of content.
Okay. Thank you so much, Avery and Erica. Let's get some emojis going in the comments for these investors and all the value bombs that they dropped. Vicki, I know you shared your thoughts a moment ago. Do you have anything else to add before we wrap up here?
No, I'll just probably answer the question about how to reach me. I think I'm most active on LinkedIn. That's where I write most of my stuff. I'm on Twitter, so definitely ping me there. But also, look, honestly, I know there's a lot of women in here, and I would love for you to participate and, just give me feedback on She Syndicate. We are in the growing or early stages, but I really think it's important, especially now that women support women. And I try and really strive to do that in my own career. I've had so many amazing people do the same for me. So if you can, in your own career, please pay it forward. And like Eric said, be nice. It's so important.
Yeah. I couldn't agree more. Yeah, everyone, like right now, it's a weird time, and a lot of success is built through adversity and stuff. But first and foremost, everyone make sure you take care of your family, friends, make sure everyone's safe and healthy, do what's right, and stay in touch with us. Like we're doing these virtual events so that people can still connect and learn and, listen to amazing speakers like we've had tonight. So I just want to thank all of our, speakers again, Vicki, Erica, Avery, and then obviously Kim and Sarah as well. Thank you guys so much. I'm going to drop in a final thing with all the info from Entre. If you want to connect with me on LinkedIn, if you want to check out our upcoming events and everything, you can do that. And then if you click the green button here in the middle, you can sign up to Beta, our app. And yeah, thank you all so much for joining on. We're going to wrap things up here. If there's anything that we can do for anyone who's watching or anything that we can do for you, please let us know. We're here to help. We're here to be a support for female entrepreneurs, and we want to be, a resource for all of you to help, get you connected to investors, other founders, and mentors as well. So we'll keep things open, for the next probably 5 minutes or so, and let people, drop in some information. All the attendees, if you want to put where people can reach you, and so that you guys can connect with each other, that'd be amazing as well. And everyone stay safe and healthy out there. Thank you so much for being a part of this. This was our second event, but our first big one where we've had multiple speakers. So I think things went pretty well for the most part. I had some trouble bringing everyone back on and everything, but thank you guys so much for being a part of this. And I hope everyone is making the most of everything that's going on out there. And we just want to keep doing these events so that at least there's something for people to do while they're sitting at home. So
yeah, thank you.
Yeah, thanks everybody.
Thank you all so much.
Thanks everybody.
Thank you all. Thank you. Bye-bye.
Bye.